Hey guys, welcome back to Indian Stock Traders, and in this video I will be teaching guys about a Bank Nifty intraday trading strategy. So in this video I have used these indicators, and if you guys have any questions or any doubts about these indicators, I have made videos on them. You guys can check it out on my channel. If you guys are new to my channel, please subscribe and smash the like button. Let's get to the video now. Okay guys, so what we need for this strategy is, first we need to change the normal traditional candlestick chart to the Heikin-Ashi candlestick chart. So what this does is, the Heikin-Ashi eliminates all the noise, alright, all the noise from the chart. It shows a more straightforward trend in the chart. So as we can see in the traditional Japanese candlestick traditional Japanese chart, we can see, there is a lot of noise, a red candle, a green candle, and all of this. So if we were, let's say, right here, this place seems like a reversal. So we might, if we would have bought this stock here, we may, exit here because this looks like a reversal. And if, we short this stock, all right, we short this stock and it takes a bullish trend, it will hit our stop loss. So to avoid all of these, these bad trades, all of this noise, we change our traditional Japanese candles to the Heikin-Ashi candlestick chart. So as we can see here, it eliminates all of this noise, all right, all of this noise from our chart, and it makes it easier to trade. Second, what we need is the MACD, the moving average convergence and divergence. Again, I have made a video on this. You guys can check it out. It's on my channel. And third, what we need is the EMA, the moving average exponential, or the exponential moving average. So basically the EMA is just the moving average of the stock, the exponential moving average of the stock. I've also made a video on this. You guys can check it out too. So we need to go to settings and we need to use the 20 EMA. All right, we need to change the setting to 20. Or if you guys also want, you can also change the color and styles of the EMA from here. Right? We will use red for this video. So this was the first part of this video. We need three things: the Heikin-Ashi, the 20 moving average, and the moving average convergence and divergence. So in the next part of this video, I will be teaching you how you can use these three indicators to take amazing trades in Bank Nifty. So let's get to that now. Okay guys, so the market right now is currently live, and this is a very good time to explain how we can trade using this trading setup. So this trading setup is very reliable and it works the best on 5-minute time frame. Our entry should be on the 5-minute time frame, looking at the 5-minute candles. So how we are going to enter and how we are going to exit and stop loss is what I will be telling you guys throughout this video. So first, let's understand how this strategy works. So the market opens at around 9:15, not around, it opens exactly at 9:15. So after the market opened, we have to wait for at least 4 candles to form, which is the 9:15, okay, 20, 25, around 30, all right, at least 9:30. We have to wait for at least 3 to 4 candles to form. Then we have to, understand and see where the market is headed. So as we can see here, the market opened gap up, okay, it opened gap up, and then it went sideways, taking support, right? We also have to see whether it is taking resistance from our 20 moving average or it is taking support from our 20 moving average. So over here, it was taking support from our 20 moving average, right? As we can see here, it is taking a very strong support from our 20 moving average and taking, high wick rejections, right? As you can see here, it is a high wick rejection from below our 20 moving average, which just proves that the 20 moving average is very reliable and a very strong support to our index, which is Bank Nifty right here. So after that, we can see that Bank Nifty has given a breakout. I'm sorry. We can see that Bank Nifty has given a breakout of about, you know, 400 points. All right, about around 420 points. So how can we catch this trend using this trading setup? So first we need to see, to enter in a bullish trade, we have the stock price has to be above the 20 moving average, or has to be breaking above the 20 moving average. So if the stock or the index price is breaking above the 20 moving average, all right, that is supposed to be, our, that is what we are supposed to watch. Not, that is not supposed to be our entry point. That is the point which we are supposed to be watching and, getting alert. So as we can see here, that was not the case. The stock was continuously taking support from our 20 moving average. Second, we have to come down to the MACD, right? The moving average convergence and divergence, very reliable indicator. So we can see here the MACD line has crossed the signal line. Okay, the signal line has crossed the MACD line from underneath it, indicating in a bullish trend. All right, we have to look at this crossover. So if it crosses from underneath it, from below it, it indicates that the market is now going to take a bullish turn. Okay, so everything in this are in at this point right here was perfect. The price was above our 20 moving average, or taking support from our 20 moving average, and MACD over here at this point right here indicated in a right here, okay, exactly right here, indicated that the market is now is ready to make a bullish move. So this right here is supposed to be our entry point, okay, for a bullish trade, because it is above the 20 moving average. The MACD line has crossed from below it, indicating that the market is going to, take a bullish turn. So let's assume we enter somewhere here. Okay. So this is how we enter using this strategy. It's very simple. I will repeat it again. Okay. So the stock, for entrance in a bullish trade, the stock has to be above the 20 moving average, or taking support from the 20 moving average. And when the MACD line crosses the signal line from below it, from underneath it, that indicates that the market is going to take a bullish turn. And if both of these, parameters pass, then we have to take our entry. Okay. So this is how you can enter in a bullish trade. All right. In a bullish trade using this strategy. Okay guys, so now I'll be showing you how you can short sell using the same setup. So to short sell, okay, we need the price to be below the 20 EMA. So as we can see here, Bank Nifty opened gap up, gave a big bullish movement of around 1%, and then it started to take, a bearish trend reversal from here. So this is the part which we are supposed to ignore and absolutely do nothing, just observe. Because if we enter here, it always has a chance that it can take a reversal and give another bullish move from the 20 moving average. So we have to avoid taking trades in this area. This is the no trading zone. Okay. When the price breaks below the 20 moving average, that is supposed to be our entry point. Okay, when the price breaks below the 20 moving average and takes resistance from our 20 moving average, that is supposed to be our entry point. And we also have to see the MACD, the moving average convergence and divergence indicator. So if the MACD line, if the signal line has crossed the MACD line from above it, okay, if it has crossed the MACD line from above it, like it has right here, which indicates in a bearish trend. Okay, let's ignore the histogram for now. Let's ignore that. If the MACD line, okay, it crosses from above it like this right here, it indicates in a bearish trend. So it had crossed it over here exactly at this point right here. Okay, so this is supposed to be our entry point. All right, so both these parameters have to pass. It's not that, if it is broken down and the MACD is not indicating it, you will enter. Okay, all of the parameters have to be in place. It has to be breaking the 20 moving average. You cannot enter from, here. You can never catch the entire trend. That is impossible. You will end up losing a lot of money if you try to capture the entire bearish trend from here. So we have to wait for it to break the 20 EMA, and we have to wait for the MACD to indicate in a sell signal, which it indicated at a perfect point right here. We can still short and make, quite a bit of profit of around 260 250 points. So this is how you enter in a short trade using the uh, trading setup. Let's call it the month trading setup. So this is how you can enter using the month trading setup. Okay, let's get to the next part of the video, which is how to apply the stop loss and the the stop loss and the target price, of course. All right, let's get to that now. Okay guys, so in this part of the video, I'll be telling you how you can apply the stop loss using this trading setup. So your stop loss has to be in relation with the EMA. All right, in this part, we have to ignore the MACD. Our stop loss has to be in relation with the EMA. And in my experience, the best stop loss in an intraday long trade using this trading setup is 0.35 point, sorry, let me get rid of this, is 0.30% to 0.40% below our EMA. Okay, so the best place to apply a stop loss would be somewhere between here, okay, below our EMA. So as I've said, we have entered the stock right here, okay, because our MACD and our EMA gave us a signal to enter here. So our stop loss will be at least 0.30 to 0.40% below 0.30, sorry, 0.30 to 0.40% below our EMA. Because sometimes what happens is, it takes high wick rejections like these, you know, this candles like these form and give a bullish breakout, so it hits your stop loss and it goes right back up. So to avoid that, the best place to apply our stop loss is 0.30 to 0.40%, and after that, the trend is mostly confirmed. So that's why the best stop loss is 0.30 to 0.40% below our EMA. And target price is something which is, it depends on you as a trader, and it depends on your experience, it depends on the day, it depends on multiple other factors. So target is something which I cannot be telling you, as today there is a very big bullish movement in Bank Nifty, and tomorrow there may not be such a big bullish movement. So target is something which depends and changes day to day. So target is something which I am leaving up to you guys, but a stop loss with my experience is the best place to apply it is 0.30% below the buy price. And if we are short selling it, if we have entered in a short position, it should be, yeah, 1 second, yep, sorry, so it should be above, at least, wow, right, so it has to be at least 0.30 to 0.40% above our buy price, above our short selling price. All right, so this is, completely according to my experience. This is where I apply my stop losses, because a lot of time it just touches my stop loss and it goes, back up. So to avoid this, right, 0.30 to 0.40, after that the trend is mostly confirmed. So if it breaks above and it hits your stop loss 35% above, then it will keep going up in a bullish trend. So that is why this will be a good stop loss zone for our trade. All right, okay guys, so this was it for this video. If you guys have any questions, please let me know down in the comment section. Thank you and have a nice day. Hey guys, so that was it for this video. If you guys have any questions, please let me know down in the comment section. Thank you and have a nice day.